So a couple of months ago, I did a very unpopular thing on YouTube by saying you should not buy Tesla stock at its current price and that it is overvalued. Needless to say, the video got a hell of a lot of hate, and I'm sure this one will too. But if you are invested in Tesla or even looking at buying Tesla at its current price, I implore you to listen to these 3 reasonings before you make a decision. In this video, I'm going to be giving you 3 reasons why you should be scaling down your position in Tesla, and more importantly, not looking at buying and adding to your position at the current price. So without further ado, let's cue the intro. So firstly, before we get into the video, I know this video is going to get a hell of a lot of dislikes, so please, if you are willing to listen to a opposition opinion, make sure that like button is turned blue. If you're new here, subscribe and turn on the bell. If you want to support the channel, there's a Patreon link in the description where you can get some exclusive perks. And if you want to go one step further and you're not from the US or Canada, there is a pinned comment with eTORO. Sign up with that link, deposit, make one simple trade in any stock, and you get free lifetime access to the investing chat room. Before we look into Tesla, let's talk about the EV market as a whole. In my opinion, the EV market is massively overvalued for the time being. That said, in the way future, 10 years down the line, maybe this market might actually justify its current valuation, but I think it's going to be a very bumpy ride in the meantime. Majority of EV companies are not even churning over a profit, and some of them are valued way more than legitimate car makers of the past. We only have to look at the Nikola EV company to scratch beneath the surface and see that it was a complete scam. I'm not saying all EV companies are scams, but what I am saying is there is some unjustified results if you just look a little bit deeper. Not to mention that all the old school automotive giants like VW, Daimler, and Toyota are actually moving into the EV sector as well, so the market is due to become a lot more saturated than what it was 5 years ago. Now moving on to the first reason why you shouldn't buy Tesla at its current price, and if you're invested you should actively be scaling down, is just by simply looking at the chart. Tesla's up over 1,000%. 10x your investment as of January 2020, which is crazy to think. In 2020, we've seen stimulus checks keep getting pumped out, and a lot of new investors who, to be honest, don't know what they're doing, looking at videos like this one on YouTube, and that is not an insult. I understand you are learning your journey, but pump into stocks that they think will 10x their money. Luckily, Tesla was one of them. But we've seen many of these companies fail, and I'm not saying Tesla's gonna fail, I really don't think, and I think it genuinely probably will be the biggest car company in the world in 10 years' time. That said, it currently is the biggest car company in the world, and if we look at the percentage terms of how many vehicles they should currently have on the road to make up their market share, well, Tesla are lagging really far behind. But that's a different argument in itself. When it comes down to investing, if we just simply look at stock charts, they get overextended and sell-offs happen. We all know at some point Tesla will need to raise money in the stock market by doing 424Bs, warrants and offerings. They've done one in the past and it was very small, but I think if Tesla need to raise money for new factories, new gigafactories and new projects, for sure this is a way to do it. And if that happens, downward selling pressure will happen. The current run-up has really been down to stimulus buyers along with the inclusion in the S&P 500, where a lot of funds who are actually against Tesla have now had to include them into their portfolio. Now with new stimulus checks coming out, Tesla probably will break $1,000, but that's a risk I'm not willing to take. If we just simply look at the chart, any idiot can see that it is clearly overextended and a pullback is due to happen. Now where that pullback will go to, we don't know, of course, but there's no harm in taking some profits here. After all, take some profits, diversify your portfolio. A lot of people I know for sure looking at Twitter are solely invested in Tesla, and it's crazy. Take some gains and diversify your portfolio. Otherwise, you will lose a hell of a lot of money in the long run. Now, if Tesla paid a dividend and somehow generated crazy profits and started a dividend, that would be a different story. But quite frankly, that's maybe even 5-10 years down the line, if at all then. So you should seriously look at scaling out your position and just buying into something that's going to pay you some form of income. Tesla can't continue this crazy run and for sure will not be worth $10 trillion in 10 years' time. That's someone actually commented and thinking Tesla will be worth $10 trillion in 10 years time, which will quite frankly not happen. I mean, if you think about how much of the US market they would have to consume in market share just to get 10 trillion, well, that figure's on screen right now. It's just not feasible. Now, will Tesla get up to the 1 trillion mark? Probably. If stimulus checks continue coming and lockdown continues, it's a good probability. But again, right now there are a lot of good companies at very good values, and it wouldn't harm you to take some out and just diversify your portfolio a little bit. Now moving on to number 2, why you should not be buying Tesla at its current price and actually selling some, is Cathie Wood and ARK Invest. Now I know in the first video a lot of people were sort of putting their trust in Cathie Wood and ARK. who basically have a lot of ETFs that follow disruptive technology stocks, and they were a big fan of Tesla. In fact, they made a hell of a lot of money with Tesla. Now, Cathie Wood is one of the biggest advocates when it comes to Tesla and companies of the sort. But ARK Invest has actively been selling shares on the side. Now, they have been buying some as well, but for the last couple of months, they've been actively selling decent sized chunks of Tesla, locking in gains, which after all is what this video is about: take some profits. That's exactly what ARK Invest and Cathie Wood are doing. So if you're following ARK and Cathie, you should probably mirror the same and start just locking in some gains. After all, nobody went poor from taking profits. Now, number 3 is warrants, offerings, and dilution. Now, for sure, Tesla has admitted that it's going to dilute in the future. In fact, they did it recently. The stock price didn't really budge because there was enough buyers there. Now, that could happen again for sure, but all it takes is one downwards trigger to cause a massive panic. You don't want to be buying and then a panic to happen. So again, another reason why you shouldn't buy. And another big reason, which sort of ties in, is Michael Burry. If you don't know who Michael Burry is, then you probably know who Christian Bale is. Christian Bale portrayed Michael Burry in The Big Short, the famous hit movie. I'm pretty sure most people who are interested in finance investing have seen that film. And if you haven't, pause this video, don't quit off, go and watch The Big Short. It is a hell of a great film. But Michael Burry was one of the first people, if not the first, to short the housing market before the crash of 2008. The guy is a great legend when it comes to short selling. Michael Burry has actively said he is short. Now, I know everyone's going to be thinking, yeah, but he's currently underwater a lot of money. I'm pretty sure he's probably using options, in which case it's cost him next to nothing compared to what it will give him in the future. He's been tweeting Elon Musk saying he knows that warrants and offerings are coming, and for sure he is right. If Michael Burry is right on this, which I probably think he is, then you should definitely take note. Now, I know there's probably a lot of people, a lot of keyboard warriors going,
LWT, Michael Burry's past it, Warren Buffett's past it, you don't know what you're talking about.
Now, trust me, if you were more intelligent than Michael Burry when it comes to finance and investing, you wouldn't be sat on YouTube watching this video. So let's be honest, let's put our cards on the table and just say this guy is more intelligent than both of us combined. He's saying Tesla's a good short and it's gonna come down in the future. Cathie Wood is actively selling and the chart is massively overextending. If you're still looking at buying Tesla, I wish you all the best of luck at this current price. But for sure, in the short term, it may well go up, but in the long term, a rug pull effect will happen. Now, there's no doubt last year, Tesla exceeded all expectations. In fact, not just on the stock price, but also on deliveries. Elon Musk is a genius. If you watch my last video, I absolutely love the guy. But even he admits from time to time that Tesla is overvalued. Now, some people say that's a joke, some people say it's sarcasm, but realistically, there's a little bit of truth there, and even an idiot can see that. Now, going on my past videos, there is a cult feeling with certain EV stocks. We've seen that we got a lot of dislikes and people just basically commenting, Cathie Wood we trust, or Elon Musk knows what he's doing, or just keep buying and buying Tesla. Now, that's great and it has worked in the past, but it won't work in the future. There's a little bit of a cult feeling when it comes to Tesla. The same as there was with Bitcoin, the same as there was with weed stocks, the same as there was with cryptocurrencies back originally, and it's gonna come crashing down. For sure, there will be pullbacks. Now, typically on pullbacks, you can expect anything up to a 90% pullback. If you don't believe me, just look at cryptocurrency. Bitcoin fell substantially before, and you can always say the argument, yes, it recovered eventually. That's great, but if you're buying it now at this current price, you're sitting through a hell of a lot of pain to get your money back. That's what the point of this video is. It's nothing to do with Tesla as a company, it's to do with value investing. And right now, Tesla is not a good value investment. I think anyone and his horse would agree that. And still, if you have hit that dislike button and you still do not agree with me, that's fine. But my biggest advice to you is if you are looking at even scaling in and you're not going to listen to what I'm saying, then just scale in on dips. Tesla's volatile, and for sure you're going to get at least 10% days where it comes back. Buying on them big pullbacks and at least get a semi-good average at this extended price, and I wish you the best of luck. So without further ado, what I'd like to ask you, my lovely audience, is where do you think Tesla's stock price will be on June the 1st this year? Roughly 6 months away, where will Tesla's stock price be? Drop them down in the comments, and if someone gets it exactly right, why not? I'll give you 1 year's free subscription on me from TradingView. Please make sure you have hit that like button, subscribed, and I'll see you in the next one. Take care, peace.